Hey everyone, I hope you guys are doing well. I wanted to bring you this video on the Navy Federal Pledge Loan hack. Now, with this hack, I want you guys to be aware of this. Beware of using this because people are telling you this strategy, but there are some negative implications with using this way to build your credit. And if you have a loan out currently, you need to be aware of a exit plan or understanding of this. If you're considering this loan, please take this information into consideration before you start the loan. Now, if you're new to my channel is dedicated to help you no matter where you are in your credit journey. This channel is about credit education, credit coaching. So if you like that information, make sure you subscribe to the channel and give this video a thumbs up. Also, at my website, I give you guys a free hard inquiry removal package. Hard inquiries can get you denied for credit, even with a good credit score, if you have a ton of them. So go to my website, download the package. I also have letters for negative items if you need to remove those, and you can check that out at my website too. And I am having a webinar on January 7th. And this webinar is going to teach you how to increase your credit score by 100 points and also how to remove negative items. You'll be able to ask me questions live. So if you want to join me, please do. The link will be in the description of the video. If you can't join us for that date, I'll have a playback so you can get it even after that time if you can't make it on that day. So let's jump into this information. Now, Navy Federal, if you don't know, is the largest credit union in the United States. And with Navy Federal, it is designed to help those connected to the military and those who are currently serving veterans and their family. Now, there are other ways you can get into Navy Federal. So I did do a video with backdoor options to get into Navy Federal. I'll leave that in the link in the description of the video in the pinned comment section if you guys want to join Navy Fed. But for all of us that are members of Navy Fed, we know that Navy Fed is about a relationship building type of banking. So with Navy Federal, they want to help their members, and they came up with this product called the Pledge Loan. Now, speaking to the representative, they made this product for two options to help their members. Number one is to build payment history, because they will be reporting with this pledge loan for you when you pay it on time payments to the three major credit bureaus. Also, they did this to help people save, and if they have debt obligations, this helped them to stay current with their debt obligations. So if you have a large amount in the bank and you put it in this pledge loan option, you don't have to worry about spending that money down the line. And as you pay off this loan, the money come right back to you, and it helps you to stay on track with your savings. Now, the hack is how people tell you to use this. With this pledge loan, what you would do if you want to start it, you will call up Navy Federal and you will deposit in a savings account an amount for your pledge loan. You would tell them the terms that you want to pay it, all the way up to, you can choose an option of 60 months or as little as 6 months, and you will make these payments and they will report it to the three major credit bureaus, and it would help your payment history, which is the largest factor of your credit score. And so with Navy Federal, for this servicing of this loan, they will get a 2.5% interest rate for servicing this loan and facilitating it for you. With the hack, what people advocate that you do is when you set this loan up, that you immediately pay, like within a couple of days, 80 to 90% of this loan off. Then you will receive that money back into your checking account. So when this loan reports, you already paid down 90% or 80% of the loan. And you will then pay the rest off with your on-time payments. Now with this, they're saying it will also show that you have paid this loan down, you have been on time, and this will help your credit profile with this hack. Now, all of this can be true, but what either they don't completely think out, or maybe they don't know, is when you are setting up this account, it is an installment loan. And with an installment loan, you have a fixed minimum monthly payment every month that do not change until that loan is paid off and closed out. There is two parts when it comes down to lending and borrowing. You do have your credit score, but you also have the income side of it and what you can afford. So the more debt that you're reporting on your credit profile and your report, the less you can qualify for. So for instance, if you're going for a home loan, because you have this home loan that you are applying for, they determine how much you can afford from your current income minus your debt obligations, like your student loan payments that you have every month, car payments that you have every month, and any other payments that you have, to see how much you can pay in a mortgage every month. By adding this fixed payment amount, that would be seen as debt too, that will make you qualify for less of a home loan that you can get approved for. I'll give you this example. My brother and my sister-in-law purchased a home within 2 years. And what happened was they had a car loan and the monthly amount was around $400 a month, but the majority of that loan was paid. They might have had like a $3,000 balance on that loan to pay off. But when they went for the home loan, because that fixed amount that was owed per month reporting of a $400 car payment, they qualified for $100,000 less in a home loan. So for you, in layman's terms, it can make a difference from you getting a $500,000 home or a $400,000 home, depending on how large your monthly fixed payment could be. So you have to take this in consideration. If you're a person that already got a car loan, some student loan payments, and some other stuff that's reporting as monthly payments, adding this on is going to be looked at as a debt. So if you need to go and rent an apartment and they're looking at your debt obligations and your income, oh, this is going to count against you. See, that's what they're not telling you. Unless your income is really high, and guess what? If your income is really high, without that payment, you could qualify for a little more. So what you need to think about is the strategy and what you're trying to do. So if you're a person that's doing this to buy a home, you might want to pay this off beforehand. If you're going for an apartment, you might want to have this paid off if you're going to try to, in the next 6 months, go for another apartment if you're trying to move, or if you're trying to get a car, or if you're trying to even get a credit card, baby. They look at your income versus what debt obligations to what credit limit you qualify for. So always remember, y'all, that's why I got my business channel. it's not just about the credit score. It's about what you can afford. You can't get a home in Malibu on a $20,000 a year income, no matter how good your credit is. So you gotta, add a little common sense with all of this. So doing that, you qualify for less. Then the other part, they are not telling you, when you close out an installment loan, say you pay that loan off, like, oh, you know what, Sherry ain't think about that. Let me pay this loan off. I'm about to apply for a house loan next month. Baby, usually when you pay off an installment loan, your credit score did. Okay, y'all have done it before. You done paid off your car note and you like, yeah, my credit score about to skyrocket. Woo woo. It don't happen. It goes down and you like, what? Why my credit score go down? Because it shortens your age of credit. Age of credit is 10% of your credit score. Now, given 3 to 4 months, your score will go back up. It could be, sooner than that, maybe a month or two. But you need to put that in your calculation of when you're going to apply. So if you're going to do that, maybe if you pay this off this month, next month might not be the time to apply for the home. Maybe you might better give it 2 or 3 more months so your score can go back up. Okay, so that's with your car. That's even if you're going for an apartment, you want to add that in, or even that credit card. You might want to sit a little bit before you do that. So think about those things, you guys. This is why this is credit education. Let me tell you now how you should do it, baby. Let me tell you. Say if you're a person, especially if you don't have a lot of credit and you have negative items, collections and stuff, remember what I tell you. You don't have to remove one negative item to increase your credit score. If you're under a 700 credit score, why don't you just add unsecured lines of credit like I preached to y'all? I don't get it. You can do that even if your credit score is bad. They still have subprime credit cards, or you can get a line of credit like Ava for $2,400 and all of that. Because guess what? If you add this debt on and you have no unsecured lines of credit, and now you add this debt and you got charge-offs and other debts, that might bring your credit score down, baby. That ain't helping, because initially you ain't got no payments on that bad boy. That's just a negative, it's a new debt. So what you should do is add unsecured lines of credit first, because remember, 30%, the second biggest chunk of your credit score, is available credit versus debt. So you want available unsecured lines of credit versus that. That's 30% of your calculations. So understand, utilization, 30%. Payment history is 35%. That's 65% total of your credit score. If you can manage that, you can see your score go up. Think about that. So you're just looking at an installment loan that's going to give you positive payment history moving forward. You can do that with a credit card. Booyah. You can achieve that with a credit card plus the 30% factor. So you can build both sides. You get it? Ding, ding, ding. Light bulb go off. You see that? So unlike that installment loan, say you owe $3,000 on a credit card that is $10,000, and your monthly payment, let's say minimum monthly payment for that $3,000 is, let's say, $150 per month. As you pay that debt down, guess what? That amount that's due every month, it decreases. And when you pay it all the way down to zero, there's no debt. Just a positive unsecured line of credit that's going to help your credit score. So if you're busting the move to go get that home loan, you wait till that's paid off, booyaka, that ain't against you like that installment loan would. But while you're making that payment, baby, you're making positive payments, that's going to affect that 35%. You're going to kill two birds with one stone, as they would say, the old folks would say. So think about that. Think about that strategy before that. So instead of getting a pledge loan, maybe apply for their unsecured credit cards with the pre-qualification. And if you can't pre-qualify, just get the secured credit card with Navy Federal. I know somebody that got a secured card, put money down like $1,000, and in 4 months they gave them a $2,000 credit limit. So when you get the secured credit card with them, you'll see your score increase when that report. And then when they convert it in 6 months on average, booyah. Now they give you a $2,000 line of credit, you're going to see your score increase again on average of 50 points with that unsecured line of credit. You're going to get an increase if you're under a 700 credit score. If you're above a 700 credit score, what you could do is use this installment loan, because you say, Sherry, I got all of that. I need a mix of credit. I need this installment loan. But that would help you. But the same thing go for you. You don't want to go applying for things with that on your credit profile being open, because what that's going to do is make you qualify for less too. So you want to strategize that out. If you want that installment loan to increase your credit score for that mix of credit, you just got to time it, baby, because with that reporting as a monthly debt obligation, you too, with that good credit, you ain't got enough income, could be denied. Okay? So think about these strategies. Think about your exit plan if you're already in this and you were about to bust a move somewhere. I'm about to bust a move. Now with that on there, don't do it. This is what I told y'all about self accounts. Remember, if for y'all that follow me, y'all already know. I already schooled you on this. This is the same thing. So you can go on and just pay that bad boy off before you bust your move. Because, baby, without that reporting on and active, you can qualify for more. You just got to gauge it, okay? Another thing, let me tell y'all, I'm not just about, the 850 credit score and you're not getting assets. Please, if you're using this, y'all, don't have an 850 credit score and die broke and your children broke and everybody broke. You want to use these strategies to get assets. That's what Sherry did. I leveraged my credit. This is how I'm telling you. I became a landlord. I invested in real estate as being a single mama with no child support. So I understood, let me leverage at 21 my credit score and let me use this as extra income. I'll talk about this later. That multifamily, that 3-family unit I'm going to live in, boo. Soon as me applying for that mortgage, that rent became part of my income for just looking at that. To qualify, it add to my income. So then with my credit, I got me an asset, a home, and it built equity, and I get cash flow. And I ain't got to work no more. Y'all, I don't work no more. Since 2012, I haven't worked. And then I leveraged that to get the other home as a single mom still, 2 babies. And left my job. I ain't had to work, y'all. I started working for myself. I ain't had to work no more. So think about that. You don't want to get in a cycle of credit. I'm telling you this about your credit cards and getting this stuff because credit is golden handcuffs. I told y'all, the Bible told y'all, the borrower is slave to the lender. I'm teaching you how to get your credit up, baby, so now you can flip it on them. Like, I see what y'all doing. Okay, you want me to look like I'm a slave, but see, I'm about to go get these assets with this. Y'all, I had your food. See, not everybody had that plan. They don't have, I got your food. I'm telling y'all to do this, not to get into tons of credit card debt. I'm trying to lead you to flip the game, okay? Because credit ain't nothing but golden handcuffs, baby. That credit score, that FICA, is not for you, baby. It's how they make money off of you. And for me to break it down, I'm just going to touch on this because I know a lot of people with the TikTok, y'all don't have, a lot of attention span. Understand that credit score is to judge you. It doesn't work for you. The credit bureaus don't give a darn about you. And why credit cards fuel the credit system, unlike an installment loan, they have an opportunity to make interest off you forever. The banks only make money off of interest and annual fees, mostly off of interest. So I just gave y'all a little bit of like deeper level game. Buy my books and stuff. I don't really promote all of that stuff like that, or follow me on Facebook. This is where I really have these talks where y'all can really understand the whole system. And how I told y'all talk about I want to deal with cash. Baby, cash credit. Stop playing yourself. I already told, if y'all knew about this money system in the Fed, that cash ain't nothing but that credit card anyway, baby. It ain't backed by nothing. I already told y'all I buy silver, I buy gold to secure my money that's in the bank. That's a deeper conversation. I got some videos down here to tell y'all about that, but I'm just telling you, this is the game. I'm telling you, get some assets. Don't be nobody fool out here. So I'll end it with that because I don't like, if some people not there with it, but I'm just telling you, don't say I ain't never tell you, because I get some people, oh, you want to get people in debt. You don't know me, baby, you don't know me. Okay. So for those that follow me, know what I talk about. This is why I'm telling you, I'm giving you the game so you can flip it on them. I'm going to flip it on them. And even with that, then ain't so far you can go, because they ain't going to let you go but so far. Then you're going to have to get creative and start using ways to do creative financing. Okay, so go to my business channel, y'all. I'll be schooling y'all on different ways to make multiple streams of income, or go to my daughter's channel, Diamond Chanel. She talks all about that. 165,000 subscribers. So she does what it does, or you can come see both of us, really, and we're going to tell you about how to do it, okay? So check that out. Consider all of this and figure out your strategy on how you guys are going to do this. If you got questions, just leave it in the comment section, you guys. Or if you need to ask me questions directly, go to my website, submit your question. It go directly to my cell phone. So I hope to see you guys in the next video. Stay tuned.